Imagine two people living parallel lives. They work at the same job, take home the exact same salary, and commute through the same city. Yet every month, a 5,000 rupee gap appears in their cost of living. One pays more to maintain the exact same lifestyle. Luck, intelligence, and negotiation skills play no part in this discrepancy. The difference is the weight of a single, unseen three-digit number attached to their names. Person A sits in the red zone with a credit score of 550. Person B stands in the green with a 750. When both individuals walk into the same bank for the same loan, the institution sees two completely different levels of risk. The bank assigns Person A a 14% interest rate. Person B is offered that same money at just 8%. This proves the advertised price tag on a loan is a fiction. The individualized cost of your debt is dictated by your score. We can see the literal cost of this gap by looking at the math of a 10 lakh rupee loan. At a 14% rate, Person A repays 19 lakh rupees. Nearly half is purely interest. Person B borrows the same amount at 8%, repaying 14 lakh. This reveals a 5 lakh rupee gap for the exact same borrowed capital. Person A surrendered 500,000 rupees to the bank, while gaining zero extra value. This mathematical penalty extends into every corner of daily survival. Insurance companies use low scores to justify higher premiums, charging more for the same coverage. Landlords use the score as a gatekeeper for rent approvals, often demanding larger deposits from lower-scored applicants. Even car loans carry punitive rates that turn a standard vehicle into a massive financial burden. Ultimately, a low credit score acts as a shadow tax, systematically draining money from those already financially vulnerable. The score is a rigid algorithm designed to calculate historical financial trustworthiness. To improve that calculation, you must follow 3 rules. First, pay every bill on or before the due date. Second, maintain a credit utilization ratio below 30% of your available limit. Third, stop the accumulation of overlapping unnecessary debt. Reaching Person B's reality requires no secret maneuvers or existing wealth, only the application of strict long-term behavioral discipline. A low credit score allows you to participate in the financial system, but makes that participation exorbitantly expensive. A high score subsidizes your existence, making the exact same life significantly cheaper to maintain. The divergence between these two timelines is built point by point. Your credit score is the literal price tag of your life. Every point you gain is cash that stays